Stock markets plummet as investors panic over Donald Trump's global tariffs. New trade tariffs are now translating into higher costs for American consumers. Meanwhile, the EU is preparing to unveil countermeasures against Trump's tariffs, while automakers suspend exports to the US. Hello, I'm Tayyiba Aydin with the latest business and finance news here on TRT World. I'll just stay here. Stock markets plummet as investors panic over Donald Trump's global tariffs. The new trade tariffs are now translating into higher costs for American consumers. Meanwhile, the EU is preparing to unveil countermeasures against Donald Trump's tariffs, while automakers suspend exports to the US. Hello, I'm Tayyiba Aydin with the latest business and finance news here on TRT World. Asia-Pacific markets extended their sell-off on Monday as US President Donald Trump showed no sign of backing away from his sweeping tariff plans, or in his words, sometimes you have to take medicine. Chinese markets led losses with the Hang Seng index plummeting more than 12%, the largest decline since 2008, while the mainland CSI 300 fell by 7.7%. Taiwan stocks plummeted almost 10%, the biggest one-day percentage fall on record in their first trading day since the United States announced the import tariffs last week. Over in Japan, the benchmark Nikkei 225 and broader Topix index both declined by around 7.7%. Trading in Japanese futures were suspended earlier in the day due to the market hitting circuit breakers. South Korean indices were down by more than 5%, while Australia's benchmark extended losses to 4.2%. Meanwhile, US oil prices dropped below $60 a barrel as futures tied to US West Texas Intermediate crude fell by more than 3%, their lowest since April 2021. Gold prices also fell to below $3,030 an ounce, down from recent records. And cryptocurrencies followed suit, with Bitcoin slipping to $75,000 apiece. And for more on this, we're joined by Mark Humphrey-Jenner in Melbourne. He is an Associate Professor of Finance at the UNSW Business School. Now, Mark, a heavy sell-off across the board, not seen since the COVID-19 pandemic. What should we make of this?
Yes, certainly the market has not dealt with the tariffs particularly well. Almost all indexes have decreased significantly. The ASX 200, for example, was down 6% at one stage. But of course, we're seeing some indexes go down 10%. In the United States, we are expecting a Black Monday, so to speak, in the stock markets. But we also had a Black Thursday and a Black Friday. So in essence, we're seeing markets plummet around the world. Now, this is in large part on the back of both the tariffs to begin with, but also the prospect of retaliatory tariffs coming in from China and also from the EU, with the EU set to meet on Monday. Now, certainly, if the US strikes deals, and it's been reported that some 50 countries have tried to call President Trump to strike a deal, if deals do start emerging, then potentially we could start to see a flaw in the stock market. But at the moment, we are seeing a lot of negativity. And that in large part is, of course, earnings are expected to decrease significantly on the back of these tariffs.
And Taiwan has had its worst day on record. It's a key market for chips used in artificial intelligence. What would these measures mean for the future of AI?
Well, these measures are not positive for the future of AI. Now, a lot of it will depend on how severe the retaliation gets, but we are seeing a bit of a rupture of the relationship between the US and China, which is going to exacerbate the rift at an AI level, which had already been sowed by DeepSeek, for example, where there have been allegations of intellectual property theft. Now, we're looking at, say, Taiwan here. Now, the Taiwan index decreased significantly. Now, that in part reflects the concern that for Taiwan to navigate these tariffs, it's going to need to move some more of its semiconductor manufacturing to the United States, which will in part reduce its strategic importance. But of course, Taiwan itself was hit with tariffs, which is not going to be a net positive. And ironically enough, it was hit with tariffs because it produces semiconductors, which are often required for many of the high-profile tech companies based out of the United States, such as NVIDIA. So certainly, Taiwan did suffer significantly from these tariffs. The path forward is not necessarily going to help them from a geopolitical standpoint in terms of investing in the US, however.
And what would help stabilize investor sentiment at this point?
Well, there's probably a few things that could help stabilize, some of which are more realistic than others. At the realistic end, if we do start to see some deals emerge. So, for example, it's been reported that Vietnam has made overtures to the United States that were very positively received to come up with a deal to drive their tariff down towards zero. If we start seeing deals like that, well, then the market could start stabilizing. Similarly, we've seen reports that Israel has tried to make overtures to the United States, reducing its tariff on United States goods. And we're seeing some moves along those lines. That could help stabilize markets. Furthermore, if the EU holds back from significant retaliation when it is meeting, that would also help. Now, that's not to say the EU should just capitulate necessarily, but perhaps talking first would be better for markets than going all out down the retaliation route, as China potentially is discovering at the moment. Now, areas that would make things significantly better is if the US were to pause an imposition of these tariffs to give a time for those negotiations. Bill Ackman floated the idea of pausing it for, say, 3 months, for example. That doesn't appear to be particularly realistic. An even more possible or an even more positive outcome would, of course, be a movement away from these tariffs. Now, that is very unlikely to occur, but in the tariff formula as implemented, there appeared to be a mathematical error that perhaps is a little bit tangential for the discussion at the moment, but that seemed to inflate the perceived tariff fourfold. And if those errors were to be rectified, well, the tariffs imposed on a myriad of these countries would decrease. They'd be divided by 4. Now, if they were to fix things like that, that would stabilize markets, because then the tariff would go down significantly, but that is unlikely to occur at the moment.
Right, Mark, Humphrey, Jenna, we will have to leave it there. Thank you very much for being with us.
Thanks so much for having me. It's great being with you.
Now, global markets are undergoing massive shifts. Dramatic fluctuations in numbers, stocks and global trade are now the norm. The ripple effects of Trump's trade tariffs have set off a chain reaction across continents. While some nations like the UK want to negotiate their way out of Trump's so-called tariff war, others, such as China and the EU, are gearing up to unveil robust countermeasures. A 25% tariff has significantly disrupted the automotive sector, sending shockwaves through production networks. British manufacturers, including Jaguar and Land Rover, have suspended US shipments for a month to evaluate the new economic landscape. These adjustments have far-reaching implications, impacting nearly 70% of EU exports to the United States. EU member states are rallying together to counterbalance US-imposed tariffs. The bloc is preparing targeted interventions on imports valued at up to $28 billion, a strategic move poised to reshape global trade dynamics and market metrics. Both manufacturers and investors are bracing for an extended period of uncertainty. With production lines slowing and prices anticipated to rise, businesses are recalibrating their strategies. This interplay between fiscal policy and market forces is steering economies into uncharted territory, heightening recession risks as consumers grapple with increased costs. Analysts warn that these shifts could reverberate across the financial landscape, potentially sparking further instability. For more, our correspondent Shadia Edwards-Dashti joins us from London. Now, European markets have tanked 6%. What's been the response to these tariffs so far?
Well, European markets have just opened. The United Kingdom stock market has just opened. And again, we've seen a significant sharp fall, a decline of 2.64% in the FTSE 100. Now, of course, this goes off the back of a negative downward trajectory coming from the Asian stock markets this morning as well. So in retaliation to the tariffs, we're seeing a global collapse of the economy, which is quite significant when we look into how these different countries are trying to deal with Trump's tariffs. The European Union is coming out with a united front, and they want to see some retaliatory tariffs being lumped back onto the United States on £28 billion worth of US imports. So a significant tit for tat coming from the European Union. Ursula von der Leyen saying that this is to try and push a united front right back at the United States. So of course the European Union is 27 nation states which will be lumped with around 20% on average on all goods, but up to 25% on tariffs on some particular items, which is quite different to the United Kingdom at just 10%. The United Kingdom saying, well, of course, that goes to show the good relationship between the UK and the United States, some sort of vindication for a better relationship between the two countries. Quite different when we look at the European Union as a whole, but of course going forward, of course the future is incredibly uncertain at how this is all going to play out, but for now from the European Union the response is tit for tat.
Right, and Elon Musk has voiced hopes of a free trade zone between the EU and US. What is the likelihood of that in this current environment?
Well, just to put this all into context, Donald Trump has described his tariffs as an economic revolution. We always heard Donald Trump throughout his election campaign season saying that tariffs were his favorite word in the dictionary. Now, during that time, Elon Musk was his right-hand man. So for Elon Musk to pull away from Donald Trump at the moment is incredibly significant. But of course, Trump's tariffs will have a huge impact, particularly those with more money in their pockets. None other than, of course, Elon Musk, the tech billionaire and of course head of the Tesla company. So for Elon Musk this will have a significant impact. Already we're hearing in the billions of dollars have been impacted already as a result of the tariffs being announced. So Elon Musk has pulled away, called for a free trade zone between the US and the European Union. Of course, that goes in absolute loggerheads with what Donald Trump is saying. And it seems that though Donald Trump would like to distance himself somewhat from Elon Musk following those comments, because he seemingly had him in his back pocket, and now it seems to be quite different.
Right, meanwhile, over in the UK, the government has announced that it's easing green rules to shield car makers from these tariffs. Tell us more about the impact that these tariffs will have on British car makers.
Well, like I say, it's a huge levy that's going to be placed onto the United Kingdom, in particular when it comes to car makers. They will really be seeing and bearing the brunt of it. Keir Starmer, the United Kingdom's Prime Minister, he's come out to say, keep calm and carry on, essentially, to the businesses here in the United Kingdom. What he would like to say is that he is bringing out some bold new measures to support local businesses, in particular the car makers. Now, we've heard from the trade minister this morning. She's been doing the rounds on local television stations saying that now is the time to pause, now is the time to reflect, and now is the time to try and bring about some sort of certainty. Because, of course, as we know, behind all of these tariffs, behind all of these numbers are real businesses and real people. They will be feeling the impacts of this situation with these latest tariffs. But she is calling for cool heads to move forward, because what we are looking at is in 2030, all electrical vehicles. That's that key date that everyone is gearing up towards. So the transport sector is trying to push forward to try and make sure that businesses can remain somewhat calm moving forward in this very uncertain future.
Shadia Edwards-Dashti in London, thank you very much for that update. Now a quick look at some of the other top business stories from around the world. Oil giant Chevron has been ordered to pay $745 million to restore damage to Louisiana's coastal wetlands. The verdict comes after over a decade of legal battles. Louisiana's wetlands, which are among the most endangered in the US, have been losing more land than any other state across the country, according to the US Geological Survey. Vietnam's economy grew by 6.9% in the first quarter of 2025, down from the 7.5% the previous quarter. This comes as Vietnam is facing a 48% tariff from the Trump administration, which is expected to lower GDP by 0.84%. Despite this, Prime Minister Pham Minh Chinh remains confident in the government's 8% growth target for the year. Samsung Electronics expects a 21% plunge in first quarter profits, dropping to $3.62 billion. The company's profits were dragged down by sluggish AI chip sales and ongoing manufacturing losses. Trailing rival SK Hynix in the AI chip race, Samsung leans on Chinese demand as memory chip prices tumble. US tariffs and a delayed factory rollout further cloud the company's growth outlook. And Warner Bros.' A Minecraft movie broke box office records, earning $157 million domestically and $301 million globally during its opening weekend. It's the year's top debut, beating Super Mario Bros. Analysts say the film's success is due to the game's 300 million plus sales and market appeal. New trade tariffs are now translating into higher costs for American consumers across a range of everyday goods. From buying cars to giving flowers, the price of everyday goods is rising, meaning it's now more expensive to express your love, as Omar Bakalola reports.
Roses are red, violets are blue. Thanks to trade wars, flowers cost more too. If you are in the US and hoping to brighten someone's Easter or Mother's Day with flowers, brace yourself for higher prices. Trump's long-feared trade war is now reality and is touching nearly every corner of American life. While the target is foreign competition, the fallout is local and visible in neighborhood flower shops.
It's just not profitable to grow here anymore. So everything's coming from South America, Ecuador, some from Colombia. And so, it's unfortunate, but that's what we have to deal with.
With spring being a peak season, these added import fees could lead to higher prices for consumers and potentially deter buyers.
Definitely a little nervous about the tariffs. I've been hearing about it, and flowers are already pretty expensive. I think our customers already know that. Prices have gone up over the years, and so I'm a little nervous with how much it'll raise prices for us as florists and how much we'll have to raise prices for our customers in order to make any sort of income.
Flowers are not the only thing which Americans will have to pay more for. Last year, the US imported about 8 million vehicles. Analysts say these new tariffs could add thousands of dollars to the price of a new car. Electronics aren't safe either. Most computers, smartphones, and household appliances come from Asia. Almost all consumer electronics are likely to see price increases. Your wardrobe may not escape either. China, Vietnam, and Bangladesh dominate US apparel imports, and they are now being slapped with tariffs as high as 49%. Nations that export rice to the US are among the hardest hit by new tariffs, with nearly 90% of rice coming from Thailand and India. Dinners may start to cost a little more. Canada is currently exempt from the latest tariffs, but Trump says he's planning to impose additional tariffs on Canadian lumber imports. This could add tens of thousands of dollars to construction costs. Trump believes these tariffs will protect US industries, but for now, American consumers are left footing the bill. Ömer Bakalolu, TRT World.
And for more on this, we're joined by Kyle Rodder in Melbourne. He's a senior analyst at capital.com. Good to have you on the programme with us, Kyle. Now, new tariffs are expected to push up costs across several sectors in the US. How much of this do you expect will actually trickle down to consumers in the short term?
It will be a significant price shock for consumers. I think the big concern since last week is that the tariffs on average were much larger than expected. On aggregate and across all imports, it's going to be about 20%, which takes the tariff level in the United States to the highest in 110 years. So although it's probably going to be the case where this is a one-off price shock, it won't be inflationary in the long term or won't lead to sustained inflation. There is big price increases coming down the pipeline for US consumers, and that's both going to have an impact of obviously not just raising prices, but also weakening economic growth.
And given that this will hurt US consumers, do you think these tariffs are mainly a negotiation tactic, or are they intended as permanent measures?
I think that US President Trump believes that tariffs are indeed some sort of panacea for the US economy. At the start of the year, a lot of commentators were suggesting that the very bellicose rhetoric from the Trump administration about tariffs was more or less to gain leverage in negotiations, not just for trade, but for other things. I believe that over the last week, it's become very clear that rightly or wrongly, the US president believes that tariffs will be a way to reshore US industries, create jobs and raise tax revenues for the government. Now, I believe that that's not going to be what happens in reality, but it says to us, or it says to me, that this trade war is going to continue, that President Trump wants to keep these tariffs on, whatever the damage. And as a result, these sort of price shocks that consumers are likely to feel, and again, the slowdown that the economy is likely to experience is probably going to be a lasting one.
And which sectors do you think are most vulnerable to prolonged trade tensions? And are there any that might benefit from these tariffs?
There are certainly some industries that could benefit from sort of protectionist policies, and we have seen over the last few years some degree of arguable protectionism emerging in the United States, especially around the tech industry and trying to, say, reshore chip manufacturing and other high-end manufacturing, more or less to compete on the global stage and ensure that US tech supremacy remains intact. But most of all, or more broadly speaking, it's going to be a negative thing for most US industries. It will raise costs across the board. It will shrink corporate profit margins. It will slow corporate investment and weaken employment as well. And that's all going to lead to not only, again, higher costs, but weaker demand going forward too. A good illustration is, the kind of tariffs that are being applied on Vietnam. We're talking about an economy that largely exports apparel, shoes, these things that in the United States can't possibly be produced, if not at a very, very high cost. Those things aren't going to be produced in America. They're just going to result in higher prices, and no one's going to be the beneficiary of them. So some industries will benefit. For the most part, most industries will find this very, very costly. And again, the consumer is ultimately going to be, and workers are going to be the ones that bear the brunt most of all.
Right, Kyle Rodder from capital.com. Thank you very much for your analysis.
Thank you.
Now, the US added 228,000 jobs in March, surpassing expectations. But the positive news comes amid continued cuts to the federal workforce. The US government is slashing federal agencies once again, with education and media already targeted. This time, the US Health Department is in its crosshairs, with massive layoffs already confirmed. How will this affect America's health system, and what does it mean for the millions who rely on these services? Pranani Shasta has more.
Protesters gathering outside the headquarters of the Center for Disease Control in Atlanta last week to voice their outrage as thousands of jobs are slashed across key health agencies. Researchers, scientists, doctors, support staff, and even managers are among the growing list of jobless.
My NIH funding was cut, and so as of yesterday, I'm unemployed.
10,000 jobs are so far affected. The layoffs are set to shrink Health and Human Services to 62,000 positions.
The entire federal workforce is downsizing now, so this will be a painful period for HHS as we downsize from 82,000 full-time employees to around 62,000.
HHS says the layoffs will save $1.8 billion annually. That's only 0.1% of its $1.7 trillion budget. This cut will have a broader impact. In fact, the surge in U.S. job cuts, up 245% in February, largely due to government layoffs, underscores the scale of disruption. And it's not just health workers who are suffering. People with disabilities and those in low-income households will also be affected as services are cut. The layoffs will have far-reaching consequences.
There are specific programs that are being lost that are going to have a huge impact on specific populations, for example, the cuts to HIV funding. There also are cuts I don't understand, like taking away statisticians who are essential for analyzing the massive amounts of data CDC collects. They may continue to collect some data, but who's going to analyze it? There are administrative and technical staff, IT staff, who are critical to the functioning of the agency, who are going to go away, and your average scientist is not going to be able to fix your IT systems.
One critical area that will be hit hard is tuberculosis research. It relies heavily on NIH funding.
So NIH funding for tuberculosis research, one of the largest funders of tuberculosis research in the world. I think it's going to result in increased morbidity and mortality due to TB and much poorer record keeping and counting and surveillance of the cases that we do have.
As the government moves forward with these cuts, America faces a new chapter in its health journey, one that may leave many without the crucial services they rely on. Pranani Shasta, TRT World.
Gold mining in Paraguay has taken off in recent years, transforming local villages. But this boom comes at a cost. These unsafe practices are threatening key agricultural crops. Emre Boz has the details.
For many in this Paraguayan village, digging for gold has brought wealth along with new jobs.
Mining has been carried out for over 2 decades, but in the past, it was done manually with shovels and pickaxes, before evolving to the use of mills. More recently, technology has advanced, leading to the operations in pools.
Gold exports are on the rise. In 2023, the country exported $147 million worth of gold. That's up from the $16.2 million sold the previous year. In Paso Yorbay, the mines mean jobs in everything from gold processing to transport and equipment supply. But there's a downside. As gold output expands, yields of crops like the indigenous yerba mate plant are dropping, largely because of air and water pollution from the mines.
It's too difficult to have both yerba and gold in the same place because to extract the gold, they use extremely strong chemicals like cyanide, which affects the yerba plant. Not only the yerba plant, but also what we produce with the plant.
Agriculture remains crucial to Paraguay's economy, employing nearly 26% of the country's workforce and contributing 21% of GDP last year. The government has now introduced regulations to try to protect it.
The entire association is also working to establish strict guidelines so that any members who do not comply with environmental rules will be suspended. Pools or projects that fail to meet environmental requirements will be suspended with no more soil provided, and they will not be allowed to produce.
But despite these efforts, the gold rush shows no sign of slowing down anytime soon. Emre Boz, TRT World.
And that's all your business news for now. Thanks for watching.